Good evening to you, Doc, and welcome to Talking Point once again. Right. So let's begin the conversation, Prof. This is not the first time we've seen the cedi gaining strength against major trading currencies. It looks like this time around it's become topical and everybody's talking about it. What's the difference? What's so special about this particular recovery that we see with the cedi?
Okay, thank you, and good evening to our cherished viewers and listeners. Yes, I mean, in economics, we talk about stable price, which is not the same as fixed price over time.
Right.
Usually, either appreciation or depreciation within a certain lower band is helpful, and that's what we will say, maybe there's stability. However, even though over the decades, let me put it that way, we've seen the cedi usually on a certain downward trend. We'll say that is what is on the lot of the cedi, put it that way. But of course, as you rightly indicated, we've seen a surge, more or less, a strong strengthening of the currency against, especially the USD. And the rest of them. I think it has raised concerns because of the suddenness, right? Typically, if you say it's improvement in the economy that is causing your local currency to strengthen, you would expect a certain gradual path, okay, gradual over a long period of time. Then it means that because there's a base why the appreciation is moving on. And actually, before it becomes an issue, the market would have anticipated that because the market would have been looking at the fundamentals.
Right.
So typically, if it's driven largely by the fundamentals of the economy, you will see it. And typically in economics, when we talk about the fundamentals of the economy, we are talking about variables as it relates to, for instance, the real sector.
Okay.
The real sector, we can disaggregate that into three: agriculture, industry, service. So if you see that there is transformation sort of in the economy, you want to see whether this strengthening, you can trace it to agricultural productivity, whether you can trace it to maybe industrialization. We are producing more here, we are manufacturing more, there's more exports, and therefore export is bringing in a lot more and all of that. Of course, again, when you pick agriculture, you can't see much in the last couple of months. But of course, when it comes to, again, primary commodities, that is what we are known for. And you indicated that you can talk about gold exports. Okay, so gold export had raked in a lot of revenue, but it's not really in terms of value addition. It's the same, it's more of the same. Raw gold is what we are exporting.
So it's quantity and price.
It's quantity and price has been favorable from the international market, also because of the uncertainty with Trump tariffs, okay, as people try to Trump-proof their future, right?
Now shifting to gold as a safe haven.
Yeah, so there's a gradual shift from currency-based asset portfolio to real assets, okay? Because anything that would affect import-export would invariably be traced to currency.
Right.
Okay, so you can see that. So it's not just the USD. You can see other currencies as well, even if you look at the data from Ghana and all of that. Then again, when it comes to industrialization, you cannot say that in terms of value addition, really? There's transformation there. You can't talk about that. Then again, you want to come to service and then see whether service has also improved. Of course, that is where my big brother operates. But of course, when you talk about the service, you can see service has been driving growth. And if you look at the structure of our economy right now, service is a leading contributor to our GDP, but that's not quality service. In fact, it's not the kind of service we want to celebrate. Okay, I acknowledge those who operate heavily in that market. In fact, that service is also driven significantly by retail and wholesale. Okay, and that aspect is also not contributing to our tax revenue. So if that aspect of service is what is driving it, then you are not growing a taxable economy. Right. So in the last 15 years or so, you can see that retail and wholesale averagely up to 14 to 15% of GDP, but the tax contribution is less than 5%.
Right.
Okay, it's less than 5%. Meanwhile, if you look at manufacturing, even though we are doing something around 14, 15% thereabout, the tax contribution is very high. The same thing like financial and insurance. Its contribution to GDP is not that much, right? But the tax contribution is huge. Right. The same thing like mining and quarrying. But the mining and quarrying, even though the export has gone up, we are not maximizing our tax revenue from that. Okay, so the bulk of the tax revenue from mining is from the industrial big miners and the rest of them. When it comes to the artisanal small-scale mining, right, of course, smuggling and a whole lot of things, so we are not getting sufficient tax revenue from that. Okay, so if you look at it, that's one aspect, fundamental, real sector. Then you also want to look at the public finance or fiscal discipline. You can check the box over there. So what you see here, a part of it is coming from some kind of a shock therapy applied to the economy from the Ministry of Finance in the 2025 budget. Okay. So they have switched significantly to what we call expenditure-based fiscal consolidation. You shrink expenditure. Okay, so once you shrink expenditure from the government side, then the government is the biggest spender in the economy and all of that. That is going to play a role. So in terms of injection, liquidity into the economy is restricted. Right. So that is almost like the way some people will say, you medically induced someone into coma, sort of, right? So that as a way of stabilizing. Because the understanding also is that the economy is overheated, given from excessive expenditure, injection into the economy, that is not accompanied by corresponding productivity, then you see inflation. So basically inflation, you are saying that aggregate demand exceeds aggregate supply. You open it up. What are the sources of aggregate demand? You can look at it also for money printing, right? So that from 2022, and then the expenditure and all of that. Then you want to look at aggregate supply. If I put this together from the fiscal side, there is a backing to this. And you can see it's intentional. Right. That we want to do this to stabilize. We want to do this to calm the economy because the economy is overheated. So government isn't spending that much as we speak. In fact, you can check across ministry, department, agencies, whether entity tender committees have been reconstituted and whether expenditure is actually going on, government is making payment and all of that. Once they are not doing that, you realize that then again...
government is actually reviewing a lot of contracts.
Yes, and all of that.
Now begin to pay. They've not really started paying contracts.
Then again, you want to look at the import data. Whether there's significant uptick in import, that is also not happening. Whilst from the fiscal side, it lends to this kind of direction, what we are seeing. There's a strong coordination from the monetary policy side as well. What are they doing? They are doing sterilization. They are mopping up excess liquidity. In fact, more than twice what they were doing previously. So what it means is that the little liquidity in the system, the central bank, through the Bank of Ghana, bills, monetary policy bills, they are mopping up that excess liquidity. Then you have a surge, right, in gold revenue, earnings, remittances, okay, cocoa, and the rest of them. So the opportunity has been created. There is subdued demand, low expenditure, but from the supply of FX, Bank of Ghana has the advantage. So when they even intervene minimally in the market, it's sufficient to cause the rate to change. And our economy is very shallow. We are talking about maybe over $75 billion economy, but I can assure you, $30 million request Monday morning can change the value of the city. Okay, so all these things are coming to play. So there's intervention, as you indicated, but there's subdued demand. The economy's ability to absorb what we call FX is subdued. So with little intervention in the market, you can see the recovery of lost value happening. But when you want to look at the implications and all of that, then people are concerned. You know why people are concerned? As human beings, it doesn't matter your level of education. We all prefer relative certainty. We all prefer relative. People want to be able to plan. So for instance, this is second quarter, right? So people have approved their budget. Budget execution is going on. And then there's this disruption. The question is, what do I do? It's not so much about today, but what is the future? So there are those who want to plan for 1 year, 2 years, 3 years, and all of that. And that's why they are concerned. It's not like people don't want to even celebrate what is happening, but the question is this sustainable? Can I plan with this trend, okay, into next year, next 2 years, 2028, and the rest of them? Then the answer will be that, hey, hold on.
And I think that's going to be one focus of this particular conversation, the sustainability of this rally that we've seen on the market. But really, as you were saying, so the appreciation of the cedi as we've seen it, is it real?
Oh yeah, it's real.
Is it, as you said, a shock? Just for
there's a backing. So when I say there's a backing in terms of coordination from fiscal side and then monetary side.
Right.
In the time past, what we haven't seen is the fact that whilst the monetary side is tightening, okay, and mopping up excess liquidity, there's a loose end from the fiscal side. And in fact, if you look at a lot of the challenges that Governor Addison faced, was not more in terms of their incompetence, but it was more of the fact that the fiscal side...
He complained so many times.
You could see it at every MPC briefing. It's like, I felt he needed another way of communicating that, but he didn't get that. But thankfully, at least under this current administration, we've seen that coordination. We see that the governor of Bank of Ghana and the minister of finance are all looking in the same direction. So there's that complementarity. And that is what fiscal and monetary should do. You expect that the monetary will complement the fiscal and not that the monetary will be pursued as subordinate to the fiscal, because that's what we've seen in Ghana. And typically, that's what we call fiscal dominance of monetary policy, right? Where the fiscal is so strong and create the mess, essentially, then you have to use the monetary as a broom to sweep the mess that is created from the fiscal.
Let me bring Doc into the conversation. So you have followed the Ghanaian economy. You do business with the dollar, with the other foreign currencies and what have you. The gains that we see with the cedi, from where you sit, what is your understanding of what has really brought us to where we are right now?
Yeah, thank you very much. I was part of the economic dialogue,
sure,
and I was with the microeconomic committee.
Right.
And to tell the truth, I didn't see Professor Balkins there. He was not part, but whatever we discussed there is what he just said.
Right.
Then we captured all these points, that the coordination between fiscal policy and then monetary policy, and that the fiscal discipline and all this, that we adopt prudent and stringent monetary policies and all that. The governor have been doing well. And it means that the government was serious when he established the economic dialogue, because he's listening to the input that we're giving. So this gains that is coming, people are attributing to foreign factors, but it also means that people have prepared. Because if you are not well prepared, advantages will come and it will not benefit you. And that's exactly what is happening. And for me, what is very important is for us to take advantage of these gains and use it to transform the economy positively by enhancing on productivity, as Prof was saying. That's the only way that we can be able to sustain. Because if these gains are not backed by productivity, we don't enhance on productivity and all that, then it will come and just go through our fingers, because we don't have any strong backing through what we have been able to produce and even sell, export to get more. And that's why I always say that this is a golden opportunity, because it's going to bring down the other indicators that made business thrive, the interest rate and inflation. This thing is going to pull them down.
All right.
So we are on the threshold of, if we do things well, to full recovery of this economy. But how to sustain it? And this is what my members always, like Prof was saying, they had a doubt. So you see that I've become a lone ranger, trying to push, encourage them to do certain things, and then some of them sit back and look, because they will call me and say, is it not too early to call that and all that? So whatever Prof has said, in fact, I'm very excited that we have people like this that need to be listened to.
There are some who are concerned that the cedi's appreciation will, aid the import business to the detriment of local production. You've heard such concerns.
That's what I said, and I had a banter with an economist, and that has brought some kind of problem for me, and after this meeting, I'll just talk to Prof. I've heard this thing so many times, and I don't think it is a right methodology. Because why do you say that a strong currency does not benefit export? A strong currency help you to, especially when the dollar is coming down and all that, means that your operational cost is going to come down. Most of our manufacturers and all that, about 90% of their inputs of manufacturing is imported. Most of our local production for export and all that also depend on most imports that we do. It means that it will bring your the cost of production down, that you will be competitive, and then you can offload your produce to a very competitive global market. In these days that we are putting tariffs here, left and right, if you're able to produce at a cheaper cost, it means that the tariff cannot even negate your effort and all that. And so it's very important that once this thing is creating the enabling environment, it's not creating the environment for farmers and manufacturers or importers and leave exporters behind. It's creating the enabling environment for all of us. So this is the mistake that we've done in the past. That governments have been advised that if the cedi have become so strong and that is not working for your export revenue, and our government should get all the export revenue because the cedi would have been so depreciated, and that when the revenue comes, government will get so much money and be able to pay workers and all that, or exporters will sell and get more money, whether their produce will be higher, and that it will also curtail their efforts to the international market or not. I don't understand why people will even think. And normally, if we try to do this, in the past, this thing was called devaluation, and it never helped any government. It's obsolete. Right. That they say that currency have been so strong, let's devalue the currency and all that and all that. And when they try to do this, it backfires because, you know, it speculates, it generates negative speculation. Where, because the cedi is losing its value, people will tend to buy the dollar and save it as a store of value. Right. And then it triggers the problem to the extent that you find it difficult to even manage stability. And so that theory is obsolete.
Prof, I've heard you express similar concerns that local production may not, you know, benefit from this cedi's appreciation.
So yeah, I mean, we need to make room for every sector of the economy. So I agree, imports. There's no country that does not import, and all of it's also about the balance. So if you look at it from the data, and I'm expecting that going forward, Ghana Statistical Service will give us that granular data in terms of not only in terms of the baseline disaggregation of inflation, food, non-alcoholic, and then non-food inflation, but then we want to also see inflation on locally produced versus inflation on imported items. If you look at
that they capture all the time.
Yeah. So if you look at the data, the recent one, I was looking for it, but if you look at the data from November 2003, we had a fundamental shift, which is not good for the economy, in that inflation on locally produced items rose higher than imported inflation. Now, if you put all the factors together, you realize that together with the strengthening of the local currency, it makes local production a bit costly. And that is why we are saying that if this strengthening is linked to structural and then also productivity transformation, you will see so many other variables also working and trending downwards. So for instance, if you look at it that local firms will borrow cedi denominated, the interest rate is very high. There are so many restrictions on the growth drivers and all of that. So already they are confronted with so many challenges. So if the exchange rate moves in a certain way that favors an aspect of the economy, then it will put them at a disadvantage. As we speak right now, the data is telling us that it is far cheaper to import into Ghana and put a local logo on it than actually setting up a production function. Okay, all right. So we can celebrate this if the goal is more to promote what we call import-oriented economy and the rest of them, okay? But that's why I'm saying that the sharp appreciation is a cause for concern. And whether we want to go on this path for long is a cause for concern. But look at it this way. If you pick our inflation and you look at the fact that aggregate demand exceeds aggregate supply, and you want to understand the source of the aggregate demand, okay, from fiscal stimulus or fiscal indiscipline, as we saw it in the run-up to 2024 election, and then also monetization of the deficit and all of that, that is fine. But our biggest problem as a country is because the economy's supply capacity is severely restrained, severely. So if that is the understanding, then whatever policy calibration we put in place should be geared towards promoting supply-oriented economy, which will enable local production to pick up. If that is the case, then the sharp appreciation, if we continue on this path, it will dislocate that particular direction, and it will favor imports, okay? Because already that's what a lot of people are doing. In fact, we were in this country in the past 2.5 years where businesses have relocated from Ghana to even neighboring countries like Cote d'Ivoire and all of that, because it's so expensive producing from here. It's not just the exchange rate alone. That is why I'm saying that the exchange rate should not make it worse. Because already we are talking about, let's say we are operating 8.5-hour economy, right? And we don't have power for the 8-hour economy. Okay, the last week we were in Kumasi. It was amazing. I mean, the light just, I was angry. Like, wow, is that what the people of Ashanti region go through? I was asking people, because I've been at Legon, should I say by the grace of God?
Ashanti region has had a peculiar problem when it comes to the energy situation.
So you are saying that even reliable energy for industrial uptake is a challenge as we speak right now. You heard the president talking about the need to look at the energy sector, and I want to stick my neck out, right? I belong to those who are calling for private sector participation in the downstream distribution and collection. I belong to that, and I'm not shy from that, because the biggest problem right now in the energy value chain is ECG. And because of ECG's inefficiency, corruption, procurement, and all of that, the upstream, all the people from generation to transmission are all crying simply because the problem clusters at ECG. Okay, and I think that we need to support government. And when I say we need to support government, this is where I come from. Sorry, I'm digressing. It looks like it's almost a part of an academic, right? So, because as part of the IMF-supported program that the previous administration started, there are specific structural reforms, which is also about considerable private sector participation in terms of ECG's operation. We can decide that we will not privatize ECG. ECG will still be a holding company, but we can invite private sector participation, okay, where ECG is a holding company, and this private sector, and again, that private sector must embrace indigenous character. I am not open to strategic investor where we are talking about a foreign investor. I think let's work within the economy, work with tier 2 pension funds and the rest of them, and let's see how we can scale up indigenous participation in that private sector participation. So that is how we look at it. So to some extent, it's going to have implication for export. It's going to have implication for local competitiveness. That is why I'm saying that we need to be able to reach a certain point where we can then stabilize, and it will be prudent rather to say that we are not burning the reserves, I agree, but any minimal intervention is causing but it would be better if we could store up that reserves for sustainability for long. And let me tell you, Ghana's problem. Since 1992, under this democracy, we have not been able to guarantee macroeconomic stability for long. Okay? Sometimes for maybe 1.5 years or so, and then with the slightest shock, Okay, so assuming something happens in the external market and then there's a slump in commodity prices, all these gains could easily be reversed and all of that.
If I should come in just a little bit. One thing that we tend to forget is that local food production is tied up, or local inflation is tied up to import inflation. Why am I saying this? Because let's talk about food production and all that.
And transportation.
Now, we do not do the obsolete ways with whole production. We buy agrochemicals, we use mechanized. So it's very much related these days. Right. And so when we are talking in that line, then we should recognize that it's still important that we have some stability and strength of the city for them to be able to enhance on these things. If we're able to bring down, to strengthen the city, and then import inflation goes down, is being transferred to local food production and all that straight. Right. Let's say the production of chicken and all that we want to enhance. Are the chickens generated from Ghana? We are going to buy most of the chicken from maybe Holland. Bring it, and then the feed is also being imported. Right. All of these are imported, and all is tied up to the strength of the city if we want to be competitive. So if these factors are very high, and then they produce at a higher price, because our city is not strong, then we buy from those countries that their currencies are stronger and their products have become cheaper, and bring and compete with them. So whatever it is, stabilizing the local currency is the first thing.
But this sharp appreciation is not stabilization.
And then
a disruption.
when we said that we are not enhancing our productivity, we are not using modern technologies to do things. Right. Now you can't use the old obsolete methods for your local production and expect to be competitive with those who have high technology, and we are not reinventing the wheels. Right. So let's get the economy stabilized so that it trickles to all other sectors. So but then we have to know what we are doing if we want to enhance our local agricultural system. Now we have this, you see, I went to China the other time. I said, so this is where they grow this all right. You see the net, and then it generates more.
That's greenhouse.
But, yes, greenhouse. Thank you. And what are we adopting, and what prudent? And then if we use the old systems and the productivity is not high, then we say that because of the strength of the city and all that. No.
So your members are uncertain about the sustainability.
Exactly.
Are you also worried about the pace at which the city is appreciating? I mean, there are some economists who feel
I'm highly satisfied
that it is too strong.
No.
And as Prof said, a bit disruptive.
Don't forget that it had some stability around 15.5 for a longer time. If even for business, if even it was 15 and it has been sustained for a year, that's where business thrives.
All right. Yeah.
That's where business thrives. It's not the fluctuations. The fluctuation there, we don't like it at all. And so, having stabilized and now decline in the forest and then the appreciation of the city, it is very welcomed, and for everybody to have the full advantage, especially those of us who transact directly with the forest, the importers. Most of us have gotten the gains that needs to be transferred to the consuming public. The business that we do not do it in isolation. We do it with the consuming public. They are our customers. If they are challenged, we are also challenged, because the business thrives on turnover. And so it is very important that we pass on these gains. We take some of it to recoup our losses for the past couple of years. Is very important. And then also share some of the benefits to the consuming public.
They should hurry up.
Exactly. But you see, we have a challenge here. The challenge that we have here is that in the market we have about 80% of us who are retailers, the retailers do not transact directly with the forest. Okay. They depend on the
wholesalers.
Or the wholesalers or the importers to come and buy. So if they have bought the goods, then they have to sell considerable volume of their wares, and then when they are replenishing, then at least they can strike a reasonable average.
That is why we are saying that
it's been 1 month.
I've told you
it's been 1 month.
We had stability, and then we about 1 month or 5 weeks we've been getting this. Yeah. You can't tell me for 4 months, for 4 weeks. You haven't been able to at least dispose some of your goods and buy. That's why I'm appealing to them that in this competitive era, if you behave like that, other people will edge you out of competition. Because we have a consumers market. That's one thing that the Ghanaian consuming public should know. We are not in the sellers market.
You do importation yourself. Have you reduced? Have you reduced prices?
I have told you. See, let me tell you.
And by how much?
Okay, let me tell you.
Considering the rate of appreciation.
Don't worry. Then, so you know what I do. When I bought my goods at 16.5, most of your fellow lecturers come and buy for me.
I also buy for you.
For me, I know where to go and buy.
Exactly. And so at 16, I deliberately put 5 on this 16.5 to do my calculation, because that time it was very erratic. And then at this time, I'm buying some at, say, if it is 13.5, I'm buying it. So what I've done, I instructed my sales and all that, is to go 14.5 to 15. 14.5 for a certain aspect of my products which are a bit profitable, and then 15 for those that is not highly profitable. Right. And so they started adjusting and changing the prices now. That's what I was expecting most of my our members to do. Let me tell you, some people say that they bought the goods at 16. Yes. I understand. They are those people who use fiscal money, probably when they are going to Dubai, they are going to China, they are going to Turkey to buy their wares. So they've changed the money physically and travel with it. Those people, I don't begrudge them. They have a genuine problem from the time that they bought the goods. The goods were shipped. Maybe about 3 months, maybe the goods came just this much, and all that, they will have the problem that we talk about.
So, Doc, let me finish. How long should this appreciation take, so that all of you settle down and then begin to think about reducing prices?
Let me finish this thing. It's very important.
Right.
But yet, they are very big companies that do LC. They have suppliers credits and all that. So, for instance, when they were buying the goods, when they were establishing the LC, they did it maybe in January. The dollar was 16, like we are all saying, fine. But maturity date for payment falls around this time. So there's a windfall for them. They are not going to use the same rates that they established the LC to pay. And most of them, 150 days, 140 days, 120 days, 180 is sometimes. This is the maturity. At that time, the 16 that we're talking about, most of these big, and that's why I'm saying that
we have seen some companies, some furniture companies begin to reduce.
Exactly. And today, my own Abosilkan people also have made a press release to also reduce their prices, encourage their members. We are not in a price control regime.
Yeah. And so and that is where the issue is, right? So
exactly.
Typically,
and so you are talking about the sustainability or these gains. Sometimes one thing that we forget to understand, and this one, I will appeal to the governor to look at this. The governor should look at this. Now, people are calling the bank rate around 12.
I think 11 point.
It was reached 11.
Yeah. No, it's on the Bank of Ghana figures. It's 12.35.
If it is 12.3, if somebody go to the black market or the forest bureaus and all that to tell the truth is that they are buying it around 13.6, 13.7, 13.8. How do we evaluate this? There's disconnect between
So that's what I'm saying. How long should this take?
Please.
So that everything settles in.
That's why
then we begin to benefit. How long should it take?
Bank of Ghana, we should be able to evaluate and assess why this big disconnect that is not attracting the black market and the forex. At least there should be some gap of the difference. But it's way too long. And if care is not taken, that's the ones that fuel the negative speculation. And that it's not even having the effect we are buying, and they say it, they mention the rate at 12.3 and we buy it here and all that. So Bank of Ghana should look at it, maybe sit down with the Forex Bureau operators. We've also suggested that they have to formalize all the black market operators into the Forex Bureau system, so that they will be able to regulate them rather than like we're going after them and all that. Let's find a way to bring all of them into a more formalized way. Like when we go to Dubai and all that, we go and we see how this Forex Bureau, the change and all behave.
Right. So, Prof, I think APSA is projecting that by close of year, the city should be around 14 16. Which figure do you also foresee?
Well,
ending the year?
A lot will depend on the stand of the central bank. I have a suspicion that probably the central bank is targeting exchange rates, right, at a certain level, which would probably help inflation to decelerate to the band and all of that. And they may be looking at it from the angle that from the supply side, they don't have control. Production and the rest of them, but in terms of the demand side, and also imported inflation coming down, it will help inflation to come to that target band and all of that. But the other important thing, and again, when you see the APSA report and then the other report, is whether the real effective exchange rate, right, which we use, just a technical word, whether it's in disequilibrium, for which reason the central bank is intervening, right, to cause realignment and all of that. You don't see that strongly. There are projections where the effective real exchange rates will work in parity, probably around 14. Others are also looking at 13.5 and the rest of them. So, but at the end of the day, as you can see, we don't need to put an aspect of the economy under a certain strain where now there's pressure on GUTA members to reduce what? Price. And whether, and the reality also is that the strengthening may not immediately translate to lower prices as people were expecting, because the effect is not contemporaneous, right? There's a pass-through and all of that. And we know that in economics, prices are upwardly flexible. It's easier if people have to adjust price upwards than actually asking people to what? To come down. Because when they have to come down, they can account for it through many factors, and it's always sticky. Okay. But if this is a stability we can plan with for the foreseeable future, you begin to see that you don't need to call on anyone actually to bring price, because everybody can see it. And the essence of monetary policy and economic management is not just for the central bank to know where they are going, but it's also important that that is also communicated to the market so that they are able to anchor expectations of the people in a certain direction. That is very important. And this is where I think that there may be some reversal at some point. I think for what is happening right now, the central bank is quite clear. There's strong leadership also from the Minister of Finance. So don't expect that this year the reversal can be that fast. But this is how I'm looking at it. Where would the pressure points come from? One, the budget the president is running this year, he will not run with that budget next year. You cannot continue to subdue expenditure. No. And especially from 2027 and ahead of 2028 election, you've made promises. You are even talking about big push, 10 billion.
What really is the effect of this curtailed expenditure on the economy? Are we going to be seeing growth? by the end of the year?
Already, government has signaled that growth will decelerate from 5.7% 2024 to 4%. We are likely to do a little more than that.
Sure.
But the other bit to also keep in mind is that as we all come together and fight irresponsible mining, that is going to have implication, right, in terms of the gold export itself. Yeah. Okay, and my considered view that actually it makes there's very little prudence in here if we continue on this environmentally destructive way of getting gold, okay, and shoring up our reserves and destroying our water bodies, because the bulk of the gold we are getting is from artisanal small-scale mining and largely irresponsible mining. Look, and let me tell you, even big-ticket industrial miners in Ghana are doing irresponsible mining. How many of us, Environmental Protection Agency researchers, who have access to mining sites to really check on quarterly or monthly basis that they are doing responsible what? Mining. It's been almost 5 months since our president took over, right? Can anyone go to our water bodies and say there are visible changes and all of that? So we should be moving away from this environmentally destructive growth model that causes existential threat. And let me tell you, in the next 8 to 10 years, can you imagine where Ghana will be and where would the cedi be? Okay? When all of us will have to now drink water, pray before, during, and after drinking the water. Come on. When we are giving birth with one leg and stuff like that, what GDP can repair that? So I think we should, look, it is not the excessive usage of natural resources that brings sustainable growth. It's the technology and the ways that we make good use of those natural That's why some countries didn't have natural resources like we had, but they are better developed. Okay, so I'm saying that, look, for instance, this economy is a gold economy. In the last 15 years, nearly 22% of our GDP has come from gold. That sector has not created decent jobs. Okay, and right now, what are we doing? Bank of Ghana mobilizes cedis, is that okay? Gives it to Gold Board and the rest of them to go and buy. Bank of Ghana is not a trading company. Is that okay? And all of that. So that's the attention. And then we are mopping up excess liquidity, right, from the market. How does that make credit to private sector, available to private sector to engineer growth? So there are trade-offs. So that's why I'm saying that, yes, the conditions are favorable right now, but look, let me tell you, one of our biggest problems is the fact that we can't think long-term. We are too quick to celebrate low-hanging fruit, more at the expense of medium to long-term stability. Right. That is the issue. So I think that now that we have this favorable condition, we have strong leadership from Ministry of Finance, we have that also from Bank of Ghana, we should be looking at signaling a long-term stability. So that, because there are people who want to invest in this country and they are concerned, if I invest for long-term, in 3 years, in 8 years, what will happen to the currency and the rest? So those are the things, but I believe that...
You talk about the Gold Board.
Yes.
What really has been the impact of the Gold Board in all the discussions?
I mean, they just started operationalizing it, but you can see that a lot of the things we are talking about here, you can also trace it to previous administration's policy. Okay, this whole thing started with gold for oil and all of that.
Gold for the reserves.
And then Bank of Ghana, they try to manage it and say that, hey, it's gold for reserves and all of that. So you will see that at the end of 2024 election, we had missed almost all the IMF program target, with the exception of international reserves. Because with the gold for reserves, our reserves had what? Gone up. So this current administration came to meet higher reserves than what the program had even specified. And that is why you heard the first deputy governor of Bank of Ghana. Of course, he was right, that they are not burning their reserves to strengthen the cedi because they are trending above the IMF this thing. But yes, but we can do beyond IMF program. Remember, IMF program is just ending first quarter next year. Okay? The uncertainty that comes with the fact that, hey, are we going to go for another program or what happens? And then 2028 election hanging calls for prudence right now in how we cause any strengthening of the currency. If Bank of Ghana is of the view, and of course, they need to communicate that, they need to demonstrate that to all of us, that this strengthening will be sustained. okay, in the next 3, 4, 5 years. I hope that's okay. And the market is convinced. Why not? I mean, nobody is particularly happy if the CD goes to 20.
But you think
but I'm
it
concerned.
to be sustained?
I'm concerned.
Looking at the initiatives that we've put in place, can we sustain
Look,
this?
We will talk about sustainability when every aspect of the economy is operating at full capacity, and the government itself is spending optimally. And you've rolled on all your programs. For now, what have we done? We are launching policies. We've launched Akokon Ketenkete, Ejumeura, Agriculture for Transformation, a big push. There isn't any real cash flow movement backing it right now. But you see, either from the mid-year review or from 2026 budget and going forward, government will have to scale up what? Expenditure. The other thing to also look at is whether the revenue side is actually doing quite well. Right, in terms of revenue and expenditure and all of that. Remember, if the cedi strengthens, import duties will now be cleared at lower exchange rate. There are a whole lot of implications, but I think that, yes, they've started on a good note. I like the signal, I like the discipline and all of that, but the caution will be that let's proceed gradually, okay, so that we do not cause disruptions, either in terms of how some people will benefit and how some people will lose and all of that. Let's have a good balance which allows stability for long so that people can plan and move on.
Let me contribute just a little.
Right.
I thank Prof. He has a great deal of insight into this economy. Because now he's talking and he didn't know that he was talking for the business community, how he said it. Because much as we want to stabilize the economy and all that, ensuring, adopting prudent measures to suppress expenditure and fiscal discipline, and then Bank of Ghana also mopping up asset liquidity. We should not do it to put a stress on businesses to the extent that probably so many contractors are owing most businesses and all that, and that if even the exchange rate comes down, their inability also to even buy it because they don't have the means to do it. So government should also think about businesses getting some liquidity for us to have the respite to grow. That's also very important. We know, as for economy, you look at all angles and all that. So we do not suppress too much the contractors, whether their contract is being looked at or whatever. We should also think about the people that they owe and all that, and then it will also help.
You have been talking about shifting from importation to real production. I mean, good.
So that I want to set up a business so that you can start producing.
Is it a time to be shifting from importation into doing real production?
As you know, we have two things that we have in mind, because we know that we've traveled a lot extensively, and we know how countries are self-sufficient. And self-dependent, and then we go and be parasites on them. That it is important that we also ensure that we are also self-sufficient, and that we also enhance on our local productivity. Lately, it has become my favorite term, that we should enhance on our productivity. It's very important. But doing so, we should also have in mind that we cannot do everything in the world. That we have to look at the areas that we have comparative advantage and make a conscious effort to support those areas for us to grow. You see, in Ghana, pharmaceutical, if you give it a little push, it can serve the whole of Africa. Plastic industry, the confectionery, biscuits and all that we have.
And our jollof rice.
Let's pack it where and sell it to Nigeria, probably.
Right, Prof.
And then the tiles that we made, you look at the raw material for tiles. It's the clay that you see, mountains of clay and all that is used. So we look at those areas, the cashew, the cocoa, value additions and all that. Let's try and do value additions. Let me tell you one thing. In all this, you say that prices will come down. You realize that prices will come down from imported goods, and then it will not come down from the local granules, the tomatoes, and all that. Why is this so? Because at any time that the farmer produces, he has to offload his risk and sell it to the trader because it's going to perish and all that. How are we going to help this poor farmer who produces tomato, garden eggs, and then yam and all that to preserve so that we can have the bumper? Because if we have bumper 3 days, if it destroys, it gets spoiled.
Right.
And so that's where the problem is. It's not that we are lazy and we are not even producing, but we produce, but we don't know how to pack it, enhance on this. And these are the areas that starts industrialization.
All right.
Exactly.
Prof, we'll be wrapping up because of time. So for those who are holding dollars now, should they continue to keep it? Where will be other investment opportunities for those who
that is where the problem
now?
is. Yeah. And that is why government not spending now and not paying contractors and all of them is good for the city. Apart from buying treasury bill, and then maybe bond market is closed. Where else? Where are the options? So anytime you inject liquidity, CD denominator into the economy, people are looking at where can they keep it. The next level is to fall on the dollar. Yeah. And that is why I'm telling you that the subdued expenditure, mopping up the excess liquidity, is contributing to all of this. Exactly. But we cannot continue like this for long. Okay, so we should be looking at opening up the economy. One way is to this big push. Government doesn't have the fiscal space. So this is the time to cut private sector, have infrastructure bond that will deliver the, look, Accra, we are in prison. You can't leave Accra and say you are going to any other region right now. Yeah. There are no roads. Okay, so, and a lot of these things, government doesn't have the, so we need to create options in the economy. But of course, we know that they've started well. The approach they've adopted, we all congratulated them. The regime change has brought some relief. There is confidence. The 2024 budget has consolidated that. But let's not take advantage of the favorable situation to cause major disruptions.
It looks like we are not able to have a hold on our own economy. So you tighten this side of the economy and then this...
In fact, actually, monetary policy, there are trade-offs. Yeah. As you try to strengthen one aspect, so it's always about managing the delicate trade-off between all of this. But I think overall...
Let me say something, just more. Okay. Yeah, you asked me a question, and that we want to migrate. We want to do trade diversification. It's very important for rest, because where import have become so unattractive and all that, we have to look elsewhere. And so that's why we came with the income in, income out policy for Guta, where we are thinking about exporting goods from Ghana to our import destinations, so that we use the proceeds thereof to buy the goods here. In that case, we are not even dependent on the local forest, and that we are, but to get the information from the Ghana Export Promotion and all that, the goods that is needed here, these are all the things that have to be made available so that we can also do, because in the past we do barter trade. You have to sell goods somewhere, you bring goods from there, and we want to do that will help shore the forest. And then we want to migrate from captains or barons of trade to captains of the industry, and about 20 of us have come together wanting to veer into manufacturing, and they've sent their proposals to so many places. So it's not that we are just doing trading. The migration is that we sell on tabletop, do the wholesale, the retail shops, go on wholesale, and then we travel to bring the goods. Then we do the manufacturing. That's the natural progression of trading.
Right. So we wish you well.
And so about 80%.
You hurry up.
It's about 80%. Let me tell you.
I support you.
About 80% of manufacturers now migrated from trading. They are not the lawyers. They are not the doctors and all that. Because before you can do successful manufacturing, you would have imported to know the volumes and all that, the quality and all that. So it is not true. We migrate into manufacturing.
Like my producer says, my producer says it's time. So
okay.
Dr.
I have to clear it
for Dr. of the Ghana Union of Traders Association, Guta. Professor Godfred Alufa Bokwing is a professor of finance, University of Ghana Business School. Thank you very much, gentlemen, for coming through. My name is Morris Ogbete. This has been another edition of Talking Point. Good evening. See you again next week. Bye.